All right, guys, welcome back to the channel. Now, if you miss these signals in action, you basically miss 90% of the move. And it looks like another one is forming at the moment. Doesn't necessarily mean it's going to be in the next 24 hours, but that's the point of the signal. You're not trying to get it at the very last moment. You need to be following it as it is evolving. So in today's video, we're going to look at that for Bitcoin and for altcoins. But of course, no analysis is complete without watching what the markets are doing. And we're talking about the stock markets, we're talking about the economy, the real estate cycle, and of course, crypto and Bitcoin. Make sure you hit the like button, subscribe to the channel if you are new, as each of the day's analysis builds upon the previous day. And of course, I don't want you missing out on each of the day's analysis. I don't want you falling behind with what the markets are doing at the moment. Links in the video description. I'll talk about those later. So let's kick off with the agenda first up. Obviously, the 18-year real estate and economic cycle, according to the US, still well and truly in play. Macro view here, markets are going up, and I'll show you more about that later. Each video, I just like to pull apart one particular data point. Today, we're looking at the post-election year results. Basically, the first year, year one. We're in 2025, and the game is essentially starting again for the next presidential race. The stock markets, commodities, big one here for Microstrategy after it had a significant bounce over the last 24, 48 hours. Cryptos, Bitcoins, and some major signals there that we are waiting for. They are forming at the moment, but I just want to see the confirmation signs of those. So let's kick it off with the presidential or the post-US presidential election years. Now, this is going to build into the crypto analysis. So you might think it's irrelevant, but the purpose of this is to get a broader picture of what's going on in the markets. I don't believe they move separately. You need to see strength in the market, in the traditional markets, in order to see even more strength in crypto and Bitcoin. You only see that ridiculous gambling and speculation in Bitcoin and cryptos when the rest of the market is in a positive place. Basically, more people are looking to get risk on with their investments. And at the moment, we might be building towards that, but it still needs a little bit more time. And this is what we're going to get at with the data here. Post-US presidential election years have a bad reputation, essentially not being good years. There have been many more recessions in the first year of the presidential cycle compared to the fourth year. Now, since 1901, they have shown a gain of 58% of the time, 6 out of 10 times. Not the greatest thing to bet on. It's only 6 out of 10. We really want stuff that's sort of 7 or 8 times out of 10. The good news is that 9 of the last 10 post-election years have seen the S&P 500 show an annual gain. The bad news is that it raises the potential for some reversion to the mean. So basically up, then coming straight back down. There could be some tradable ranges in here is what it is saying. So taking a closer look at the data, you can see the months that are good, the months that are bad. Essentially, they're calling them favorable and unfavorable. Favorable just means green, unfavorable means red, basically a negative month. And when you think about it, you don't necessarily want to be in the market on the favorable months because they're the months that have already gone up. You probably want to be in the market or get into the market or add to the position in the unfavorable months if the year is going to be favorable overall, because you're going to see some ups and downs. That's the way the market goes. But over the course of the year, hopefully you're going to end up in the positive and you're getting in on the unfavorable months. So the unfavorable months, you can basically see here, February, June, August through to October, and November's favorable, December favorable. So where does that leave us with the overall results? That's what we want to have a look at here. So you can pause it and have a look at all of these results on your own. However, we're going to go to the table that summarizes all of them for us. Now, the favorable months showed gains 70% of the time. That doesn't necessarily mean that all the months have to be favorable, but they're favorable months because they are closing higher more often than not. Unfavorable months, almost a 50-50 here. The thing I'm interested in are the averages. So about 9% on the favorable months, when you just average them out over the last 120 odd years. The median about 7% there, so 9 and 7%. But what if you were just to buy and hold for the year? You got about a 7% return on the just overall for the whole market, and a median of about 9%. So is it really worth it to stuff around with each of the months when you could just buy and hold? Probably not. But what we're looking for here are areas of the market that could be coming down. But what the data suggests are that there are months that might have a dip rather than a move higher. And at the moment, we're in January. It's a couple of days old only. And a favorable month only needs to finish in the green. That's all it means. So this could finish 0.1% higher, it could finish 10% higher. We just don't know. But even if that did ran up, February could be within the same trading range but finish red, and that would still be an unfavorable month. Now, looking back on the history here, I've got the total crypto market cap. You can see there are periods that are just skyrockets. On the linear scale, it's more pronounced, basically straight up, and then the crash here. You can see we're at that point now. If the market were to close, it would be at a favorable month, but the month isn't over, and there are other signs that suggest that maybe it's got a little bit more time, but obviously it's still early days. And in terms of the strength and the weakness for the current picture, on a weekly chart here, it's been down for 4 weeks from that top in early December. The 50% level still sits at 59.65 for the S&P 500, and for the futures market, still roughly the same thing, about 6,010 points. So we haven't seen a weekly close above it, so still in a relatively weak place at this. Basically, plenty of support to the downside that would still maintain a strong bull market. Speaking of bull markets and maybe the flippening of bull into bear, we still have to wait and see. It's Microstrategy. Microstrategy did have a bounce here, 13% from almost dead on the 50% level, the macro 50%. So this one here, take a look at that. That is your overall cycle low. So that's December 22 to the current top in November 24. So almost a 2-year bull market for Microstrategy. Bounced off this 285 and is attempting to continue to consolidate above at least the shorter term 50% level at 322. The same numbers apply. Anything above 420 to 450 is going to be a strong position for MicroStrategy to get to another new all-time high. Otherwise, it could be in for more of the same like last cycle. However, still very, very tradable ranges if you are looking to trade these markets, because that's what you want. You want that volatility and you want the prices to fluctuate and have big ranges if that is what you were doing. Holding, buying and holding, different story. But in terms of tradable ranges, you can see from the previous cycle, MicroStrategy topped out early. If you throw on the total crypto market cap, it topped out way early, back in February, and then putting a lower, big lower top in November when the rest of the market went into a new all-time high. But if that's the only thing you want to trade, well, then you still have tradable ranges from those lows, 94% up to that final top around 116%. So you can still sort of get in and out. But is that what you want to do? Totally up to you. The cycle, as you can see, might be continuing on like last cycle. The only thing that I could see invalidate that are closes, same price, still above $450 for MicroStrategy. Now we've got some of those major signals. USDT dominance, something we've been following for months here on the channel, continuing to form a particular pattern that has come up in 2021 that stopped the market. That to me is still the big question here for whether altcoins and Bitcoin start to break to new fresh highs, and if it is a move that can be sustained or if it's just a fake out move. So first up, let's have a look at the market sentiment. Fear and greed index, it's at 76. Absolutely wild when Bitcoin has basically closed at the same price for 3 days at $98,000 from Friday, Saturday, Sunday. And it's the same price as it was 45 days ago. Basically 6 weeks ago, it's at the exact same price. And if you've forgotten about the market for 6 weeks, you wouldn't have noticed anything different in terms of price. However, the emotion, absolutely wild. That's the deal with these markets. Every single time, the price could be almost the same thing as it was several weeks ago. But the emotion to the down, well, any emotion, the extreme greed to the upside, the fear to the downside swings left and right no matter what the hell happens. Yet, if you just took a step back, it's basically the same thing that's been going on for the last 6 weeks. Now, you guys that have been following the 3-day rule, 3 days, it could be 3 days up, 3 days down, but it's got to be from significant turning points, as is the all-time high. It's still ongoing. The only time that that ends, like what we saw in 2024, is when it breaks out or breaks down from the consolidation. At the moment, still 20 days underneath the old all-time high. And that's exactly what we saw when it was the previous signal. That was from March 14th, 3 days down. So that was lower highs, lower lows. Don't worry about the red and the green. It's just the lower highs, lower lows. And that signal ended about 237 days later. There's the top, and there is the breakout, 237 days later. I'm not saying that this time is going to be 237 days. It may as well, it could even be next week, the week after. No one knows for sure, but what it has done and what it has confirmed is that after that 3-day rule, it has now confirmed that this has been the longest correction underneath a significant top in this move to the upside. So the rule has done its job. The purpose of the rule is to ensure that we don't get carried away when the extreme emotions are happening. And so that rule, you're looking for it at the end of moves. So you can see this move here was a peak, and sometimes it's from extreme lows, and you get these 3 solid days to the upside. So when everyone's fearful at the low, you might be able to see some signs that are suggesting tides are turning and there's possibly time to be buying. Just like at the tops, when you see that signal, a lot of people are trying to buy this on the first bounce, they're trying to buy it on the second bounce, trying to buy it on the third bounce, and things are getting a little weaker, just like what happened in the previous time we saw it back in March, so nearly 12 months ago, right? And so that allows you to stay on the right side of the market and just hold off and manage your emotions, because the whole game is basically emotions if you haven't noticed by now. Tons of emotions in the last 6 weeks. You're wrong, you're right, you're wrong, upsides, downsides, but the price is still exactly the same as it was 6 weeks ago. So that's the point of the rule, is to remove the emotion. It's to remove all of that greed, or in the case of the lows, all of that extreme fear, and just focus on what is actually happening, what the buyers and the sellers are doing in the market. And they were selling off severely for 3 days in a row. Are we breaking out yet? That's the next question. The bulls need to break past 100K. Consolidation above that level is going to be the next key zone for the bulls. Doesn't matter how long it takes at that point, in my opinion. We just need to consolidate above the 50% level, which is at $100,000. Of course, it's a psychological level, previous top, so a lot of resistance happening there. And if it does consolidate above 100, well, then we've got that next stage to develop and strength to arise, breaking past that 108K. However, another rejection here spells further downside, probably somewhere around 95, 96 for the first test. The second test is around $91,000 to $92,000. So while the market's in a trading range, as it has been for many weeks now, and in particular the last several days, there's no clear direction on what it wants to do. And that's essentially what's going on here. People are waiting to see whether we're seeing further upside or further downside. But once those areas break, then we should get a little more clarity on which direction the market wants to take. USDT dominance is in a downtrend, lower highs, lower lows on the swing chart. It's underneath the diagonal, and it looks like it's potentially, well, yesterday had a rejection at the downwards diagonal. However, the show's not over yet. And while it's still in this trading range between 4.6% and the lows here at 3.7%, it's still anyone's game. Like we saw in the past, when you get a breakdown of key levels, that's when things go crazy. But once it gets into a trading range, it's a choppy mess. It's a choppy mess for altcoins. It's a choppy mess for Bitcoin. It's a choppy mess for everything. And everyone's trying to pick, well, do we have further downside or do we have further upside? And yes, I drew the lines in the opposite direction because this is the USDT dominance. Dominance going up means downside for the rest of the crypto market. Dominance going down means upside for the rest of the crypto market. So we can get little fake outs to the downside. Then it puts in lows and starts to break higher again, or it gets a little push out and that brings down the rest of the market. That's what we saw in the previous cycle going back to 2021. Check this out here. That lasted about 5 months. You see the little numbers here, 4.5, 5 months. Some lows were formed. It continued to push higher, down, pushing higher, lower, higher lows forming. And then it broke out and you had that big correction for the whole market. That was through May 2021. So while it still remains in this trading range, I'm not expecting any strong moves up or down for the rest of the crypto market. There are outliers that are making moves. We've seen SUI make new all-time highs while this is going on. but the major cryptos are probably unlikely, not impossible, but unlikely to make those big moves while it's still in a trading range. Looking at Bitcoin, ETH, the really, really big market caps, because you need that USDT dominance to drop in order for those larger market caps to begin to make their move. So those key levels, we're looking for the breakdowns of 3.7 to 3.8%. We need closes below those levels. You can see all of these days here, none of them closed below the key support level of 3.8%. And the upside is 4.6%. We still have not had any daily closes really above 4.4, 4.5%. Then you've got the 50% levels at 4.6, 4.7. So it's getting quite granular with the numbers here. But anything to the upside, you'd see a very significant move down on Bitcoin and cryptos. Any move down here, then you're going to see some pretty big moves for altcoins. Now that takes us to the total crypto market cap. And the bounce we've had over the last week, pretty significant here. Nice move to the upside, $3.4 trillion. If there is any breakdown of USDT, break up for USDT, breakdown for cryptos, you've still got a lot of support to the downside. So this could bring in that extra bit of fear that I hope we see, but doesn't mean that it's going to happen. I just want to see that to get a nice full reset of the market, because anything from here, it's just building on shaky foundations. It can keep going higher, that's fine, but it begins to get very, very shaky because there hasn't been a long enough base formed at this stage. On the short term, the weekly did close just above the short-term 50%. So you got 3.39, call it $3.4 trillion, which if it does hang out here for the next few weeks, just lines it up with the same speed of the previous move. So you had this big move from September 2023 to March 2024. All I've done there is copy and paste that line and project it from this low. And that's what that speed line is. It's basically telling you how fast the market had moved, and we're on a similar trajectory. We're actually going faster than what happened last time in late 23 to 24. So it's no wonder that the market has slowed down at this point. And if it does a couple of weeks up and down, closes higher and lower, that seems to be on track with the overall timing of where things go next, and potentially lines up with, as I mentioned earlier in the video, something around January and February for the S&P 500, whether it is a favorable month in January and an unfavorable month in February, as the data here has suggested. That might lead to a little more uncertainty in the traditional markets, which then also leads to some uncertainty for the risk assets like Bitcoin and cryptocurrencies. But if that happens, then you've got some good entry areas to get into the market. Like I said in the intro, that 90-10 rule. So here is your 90-10. Sorry for the guys who are watching on their TVs going white to dark. The 90-10 rule here. Let's see if I can do this for you while I'm live. Background colors. Let me know. Does that help out? Does that help at all with the dark background and the black text? It's a little bit difficult, but we'll go with that. So the long-term outlook is still up, as we've covered with the analysis for the S&P 500, for the real estate cycle many times before, is that the overall cycle is still up, even if there are some shorter term, weeks to potentially months corrections. I'm not saying that it will happen in terms of months, but that is still short term in the overall cycle. And for now, it's confirmed. There has been 3 weeks of correction here, 20 days underneath the old all-time high, big red day, red week down. I'll get the words out here. Inside, up week, but it still hasn't broken to new fresh highs. So this is that pause period where we're looking at that 90-10 rule. The market essentially moves 10% of the time and does roughly 80 to 90% of the gain in that period. And so if you take this time off, you miss those moves that happen over the course of just a few weeks. And that's how it happens time and time again. Most people enter late, like they did in March. The market ran up for 2 very strong weeks. Bitcoin, what was that? Oh, total crypto market, 20%. And then the overall week there was 10% into that peak. So big weeks. And then it basically paused for 8 months. And people got the absolute shits because they thought that they were getting in at the right time. It went nowhere. And then they missed out yet again. A few good weeks up. And now the market has gone sideways for longer than it moved on the way up so far. So it's just a matter of time catching up yet again. And even if it does correct, plenty of support to the downside for the overall bull market structure to remain intact. And with that, Let's have a look at some altcoins. ETH, Solana, SUI, XRP, and a meme coin I've got here. ETH, BTC, so looking at the Ethereum Bitcoin pairing here for any sort of signs of, I don't know, altcoin season occurring. The first number still over 4% and the next number over 4.6%. That's the ETH BTC pairing. The weeklies haven't been too bad. Low volume over Christmas and New Year's. That's just typical. ETH BTC's closed above the long-term diagonal for another weekly close here and also above the 50% level, putting in at this point a higher low. Lots of work to do to get to the upside. The main thing here is that it's grinding out sideways and has been for the last 2.5, 3 months. So again, not a bad thing here, but still needs to get above the 4%, then the 4.6% to cause an overbalance in price and then a trigger for the rest of the market. ETH USD, well, the ETH BTC was climbing. ETH USD has also climbed back above key levels here. First being those tops, so that was at 35.50 and getting to the $3,600 level. Next couple of small short-term areas, 3,800 above those previous tops. Reason for those tops are that they were gotcha bars. If you remember that from the collapses in the market that we watched from previous tops, it's basically areas where the majority of people get stuck in positions. So you can see that the market, the structure, the behavior changes, and you've got a couple of them from the highs, volume increases, lows get taken out. So you can see through these bars here, breakdowns. You can see through this bar here, volume increase from the previous ones, but more importantly right here, a lot of those lows got taken, and then people who were buying in late, above 3,800 to 4,000 bucks, they get stuck in their positions, and then they hold on hoping that the market goes up, and eventually they all dump out here at 3,100. If you found yourself in that sort of position, it goes for any other market. Let us know in the comment section. Hopefully no one's going to give each other crap for it, but it's just a matter of psychology here. It starts to break down and it's called a gotcha. You're stuck in a position hoping for better, and then when it doesn't come, you get that lower swing top. It basically dumps out and the selling takes place at the bottom, leading to a bounce. And so far we've had higher lows forming from that point. So it played out yet again. And that's why I'm looking for closes above those particular gotcha bars. In this case, roughly around 3,800, and then those swing tops there at about $3,900. And once that occurs, you get a complete reset of the the behavior of the market. At the moment, things are looking relatively all right on a short-term basis here for ETH USD. Solana, Bitcoin has had a bounce over the last couple of weeks. It did close above the 50% levels here at 1,800 or 180,000 Satoshis, and also the 200,000 Satoshis. So these lows still below the 50%, still below the diagonal uptrend here. So this is a pivotal moment now for Sol BTC. Closes above there this week need to happen. So roughly around 220 to 230,000 Satoshis, key level for Solana BTC to close, to form the strength, and then hopefully break higher. If it fails here, not a good sign. Probably going to retest the lower prices here for Sol, which would essentially mean that it either underperforms against Bitcoin throughout the rest of the cycle, or at best just manages to track sideways with Bitcoin. That's if it continues to fail, or if it fails at roughly 220,000 over this week or the next week. But that doesn't mean that Sol USD won't keep going up as it has done over the last few days. Look at that, almost to the exact cent. It got rejected at the 50%, not once, but twice on a daily basis here. That's why the 50% are so important. I reckon it's a great place to mention TIA Premium, learn more about the 50% for your trading plans, whether it's long-term or short-term. It could be a weekly chart, a monthly chart, so that you can position your strategies, position your portfolios for the longer term. I'll leave that link pinned in the video description as well. These things have been absolutely phenomenal for my trading, and you guys might remember from 2021, 2022, when I got out of Sol, when it broke down from that 50% level, that allowed me to save an absolute bucket load of money and not hold this thing all the way to the bottom. That can be for any particular alt or asset that you might hold. So again, here we are, rejected at $220. Ideally from here, holds above 200, which are those previous tops, and then breaks past 220, that's for the bulls. The bears, otherwise, closes underneath 200, probably retests the 187, and then back towards roughly 175. Hasn't happened yet, so hold your horses. SUI, on the other hand, has broken to new all-time highs over the last few days, $4.98 close, and then a $5.29 close. What is concerning from here? The good stuff is it's closed above all-time highs. That's fine. But if it starts to close back under the tops, I've got these lines drawn here. Every time that happens, and this goes for any market, it's basically just showing a final sign of a push higher. And if you followed any of your Wyckoff analysis, you'd see this as one of those final up thrusts. And if it closes underneath, then that's a weak sign. You can see here, there's the all-time high. The market broke higher, closed underneath only for a couple of days, and then was able to hold that level. What I want to show is back here. You see the closes above, but then back under and got rejected. And so it closed underneath here for 3 days at least, and above was less than 3 days. Notice the 3 days, it comes up a lot in terms of rules. That lets you know about strength and weakness in a market. More on that later. But yeah, you can see from that point, once it broke below that all-time high, got rejected at it, well, I guess you could call it the bear market was on for some time. Yes, the price went up later, but what it's trying to do is just save you from losing money, or essentially save you from putting in too much money at the wrong time. That's the benefit of a lot of trading rules. It's that they can save you a lot of money at the worst possible times to be chucking in a lot of money. When you've been in the game for a long time, maybe some of you realize, is that saving money is just as important as making money. Sometimes it's very easy to make it. Knowing when to save it and knowing when to not get in the market is another very, very difficult strategy to continue to perform time and time again. XRP, knowing when to not get in the markets or get out of them, is holding up okay here. You got some higher lows. It did attempt to get above the 50% level for the last couple of days, but for now it is struggling with that level. So it's around $2.40. Watch for closes above it. That's going to be strong. Close underneath, obviously weaker, and then that would lead to retests of roughly about $2. Call around 210 for a round number, back to the lows there at about $1.90. That's if it fails under this 50%. Just for some retests between 190 and 210. Fails there, leads you to a further downside. And the last one here is Sigma. So onto the memes. And I mentioned this back here, looking at buying the dip. That was essentially for a longer term hold, right? Just in terms of examples, where has it gone from here? It's up around 130%. If you manage to catch the exact low and sell roughly now, 130%. But what I was looking at for the last movements, and this happens often, especially when it's in a consolidating phase, is you can get these big bounces. That bounce there is 274%. So it's an excellent trading range. From that low to the 50% level, 278%, almost exactly the same. So yes, buy the dip by all means. Watch it run 200%, 300%. Maybe take a few profits. Who knows? Maybe it doesn't ever come back and just races up and you're an absolute multi-billionaire. That's entirely up to the markets. I don't know that. But in terms of assessing risk and reward based on history to hopefully take a few profits from the market, especially if it runs up 200 or 300% and then comes right back down, right there, look at that, 86%. That is going to be some wild emotional games that you're going to have to sustain and then recover from in order to get back to the new fresh prices. And I left my best analogy till the end. It's like if you're in a relationship, right? You got these huge emotional swings. Relationships with huge emotional swings are terrible. Maybe some of you have been in it. I definitely have, and you don't want to be in those relationships. That's what these things do. They wear you out to the end, destroy you, and then when you're ready for the next relationship, you're burnt out and you're not going to make it. Just doesn't happen. That's exactly the same thing. I'm going to use that again. I'm going to put it on X. I think it's one of the best analogies I've come up with in a long time. Emotionally wrecked relationships, that's what meme coins are about. That's essentially what any coin is, that bounces hundreds of % up and then wipes you out 80, 90% to the downside because you're just not ready for that next move. That's essentially what it's about. I'll leave that with you here. Like and subscribe. I'll see you back here at the next video. So don't go anywhere. Lots more coming up, especially this week as we're seeing things moving to the upside. Links in the video description. You know the deal. And I'll catch you at the next video. Until then, take care. Peace out.